Here's a look at 4 growth stocks I'm looking for this year, 2023 and beyond. Dutch Bros is one of them. They do drinks, caffeinated drinks. Snapchat, social media company. Palantir, the government and commercial AI software company. Coupang, the e-commerce business in South Korea. Dutch Bros is a $30 stock. The whole company is $4.8 billion. It has been higher. All-time high is around $76. They operate drive-through coffee shops, and they have custom drinks, cold drinks, frozen drinks, sweetened drinks. The company is a growth story. It's growing over 20 to 30%. Currently 184 PE, but if we look at price to sales is around 3. Price to book is 13 times. So the idea is this company will grow in to its valuation. I believe it's about 2 or 3 times forward sales if we look at it that way. If you look at the past, it's grown around 40 to 50% per year. I'm looking for hopefully around 25 to 30% for as long as possible. With this valuation, it wouldn't be unrealistic to see the stock go lower, but it would be something I would want a dollar cost average in case the market goes lower and gives a better window to buy. Snapchat is around $11 the stock. The whole company is around 16 billion. So smaller company, just like the other ones on the list. Snapchat has a social media, a camera app. It's grown 38%, but the growth has slowed down recently because of competition and just ad revenue slowdown. It is expected to grow between 16 and 19% year over year in sales, and it's becoming more and more profitable. 3 times sales currently, and has a very healthy profit margin. Palantir, it's an $8. The whole company is worth about 16.9 billion. It's a small company. This stock was as high as $35. Palantir builds and deploys software platforms for the intelligence community, and it's trying to move to commercial to scale up higher. It's a growth company, has grown between 20 and 36%. Analysts are expecting it to grow in the double digits, 15 to 20% per year. A little expensive, so if there is a discount, a drop-off in the price, it might be attractive. Lastly, Coupang. This is a South Korean e-commerce business. The stock is around $13. 23 billion for the whole company. Coupang, together with its subsidiaries, own and operate e-commerce business through mobile applications and internet websites, primarily in South Korea. It is looking to expand in other areas as well. This is a growth company. This year grew 11% year over year, and in the past 3 years was as high as 48%. It's expected to grow above 10% year over year. It's a little expensive right now, so if it does sell off, it would be attractive. Notable on the valuation side is its one-time sales right now. Profit margin is a little lower than I'd like to see for a growth company, but it's 22%. Still a healthy profit margin. Overall, these are attractive growth companies. They're not too big, not too expensive. These are companies I would like to hold for over a decade, if not 2 decades. So trying to get the best price as possible would be good. Also, a dollar cost averaging strategy would be effective in this case. So these are my growth picks for 2023. I hope they go lower so I could buy them at a better cost basis. Cheers.